Okay, hey everybody, how you doing? I'm Uncle Bruce. I'm with stockmarketswithbruce.ca on the internet and on YouTube, Stock Markets with Bruce. I've got a video today about a company that the stock symbol is AI. Here it is right here. The company's called 3C AI Incorporated. Everybody calls this stock AI. Love it. It is the soup du jour. It's the stock and the topic that the entire market is focusing on right now: artificial intelligence and how to get involved with it. A lot of people are trying to figure out how to invest in stocks to do with AI. They're afraid of getting caught with a high flying stock that they might be overpaying for. They don't know which way to go, who to believe, and on it is. The company AI has been around 10, 12 years, but been public about 3 years. And they came out with an IPO a number of years ago. And I have, I think, a chart here for you from the beginning of this company's life. Don't mind me up here, but check this out over here. No, over here. That pricing up there is 158 bucks a share back in January 2021 when we were in a bull market in the good old days. The bull market ended in October, November of 2021. So look at the bottom here of this chart. See down here? Right there's July, there's January. So the bull market ended around here. The stock's around the 50 mark. And then the stock went into harder times and ultimately hit its low levels, which was about 1016 all-time low in the last year. And then in the last year, things have really improved. The company, here's a quick flash here for just the last 5 days. 3683 is where we closed at on Friday. Looking at this chart, this is a 3-month chart from March of 2023. Here we are here, March 23 to now, and you can see it hit the bottom in May and then has really come on. Here's a 6-month chart. It's been kind of climbing and climbing. It reached the 40s. And like I say, there's the older chart from way back when. All right. This stock has got a lot of followers. It has a lot of volatility. It's got everything investors want in a company stock. It's got a sexy story: AI intelligence, software development. It's got a shorter that is telling the world this is a pile of garbage. This company is overstating its potential, and the stock is going to go down, down, down. It's got fans who just believe in this company. It's got they got cash on hand. They're growing their business, and on and on and on. Let me show you a couple of other things that I popped up here. I came up with some stuff here. And I'm doing this on the fly, so just forgive me here. Here's sales revenue. 2019, right here in front of me here, 2019, it was $91 million for the year. 2020, $156 million. In 2021, through COVID, $183, 2022, $252 million. Latest numbers now, $266. These are sales, so the sales are rising. They're not a puny little company. This is cash on hand. I love this one. 2019, they had 156 million cash and short-term investments on hand, a lot of liquidity. Then 244 million in 2020. Look at that. 2021, they raised money, $1 billion. This when they went public. And now they're still sitting on 730 odd million in cash, virtually no real debts to worry about. The company is well positioned financially to keep working nonstop 2 to 3 years from now without raising any additional cash. What I'm hearing and what the company is talking about is that they are talking about becoming profitable next year already. 2024, they'll have turned the corner. They're already experiencing positive cash flow. They think they're going to go positive on their net earnings. And so that money pile might dwindle to 500 million and then go up again. And it could go up substantially if their sales are anything like the speculation around them is talking about. Couple of things you should know about this stock, and forgive me about my handwriting. It's amateur hour. All right, there's 108 million shares outstanding on the company. 108 million shares. That's all there is. This is small. 90.58 million are free trading shares. Those can actually trade in the market. 32.3 million shares in total have been shorted. This is where it gets interesting. When you have a short position of a third or more than a third of the available stock that can trade, you got a story. And this reminds me of GameStop. This reminds me of other short plays. There are some hedge funds out there betting against these guys. And then there's the market who's saying, I don't believe you. I think this company is going to do well. I believe in the management. By the way, June 22nd, 2023. Today is June the 11th. So in 12 days from now, or 11 days from now, a show and tell. We used to call these show and tells when I was a stockbroker, Investor Day. This is where the company is coming out to say, hey, investors, here's what we're all about. Here's what we're doing. They have tons of clients. They have some of the largest companies, and they have defense contracts. Artificial intelligence software that these guys produce is in demand big time. You don't have to convince a CEO of a company that they need artificial intelligence software in their systems. They know that. They figured that out in the last year. In the last 6 months, it's become really apparent. Check out this one right here. This is NVIDIA, the chip maker. Look at the stock, $387 a share. I mean, my God, look at over the chart way over here. This is the 200 level, the $280 level back in May. And then you can see that sharp jump that we had just a little while ago, right there, where it went up $85 in one day. NVIDIA is now becoming a $1 trillion market cap corporation. And their sales, they estimate that their revenues will go from 7 billion to 11 billion next quarter. Not next year, next quarter. And so AI, management of AI have been telling the world, look, the orders are coming in. We don't have to make phone calls anymore to companies saying, hey, would you like to consider buying our product? Their phones are ringing off the hook. And I'm using old school terms here from the 80s and the 90s. These folks are being contacted by companies worldwide for their software, AI intelligence software. These guys are on fire. And so the battle is on between the shorters and the longs as to where this thing's going to go. Like I said, this stock has got everything everybody wants. You have a tight float. You have a ton of short positions. You have a lot of volume going on the stock. Friday, it traded 28 million shares. Like I said, there's only 90 million that are free trading. 28 million traded on Friday, 32 million short. The company is a market cap at $4.1 billion. They've got cash on hand, a nice position, as I've shown you here already, of 730 million in cash. So 20% of the market cap of this company is money, is cash. They're in good shape, and their sales are projected to really take off. The projections so for these numbers you see so far are a nothing burger. Now, there are those out there who are saying, "Oh yeah, but you know, if they're so hot, why is it that they haven't hit 300-400 million in sales yet?" And the management of the company is saying, believe it or not, 6 months ago to a year ago, we had to make phone calls and had to make a second phone call. We had to have connections with different companies to get in the door to see these guys, to try to explain to them that AI intelligence software is going to revolutionize your back office. It's going to take your company mundane jobs a lot of your people have, and it's just going to eliminate this mundaneness. It's going to really up your productivity. Up to 6 months ago, nobody wanted to talk to us. Like very, very few reluctantly talked to us. Say, okay, I'll listen to your pitch. Give me what you want. Now, all of a sudden, it's stopped. It's turned on a dime. Everyone is contacting these guys and anyone else that produces software to say, have you got working software? Do you have AI intelligence software now that we can buy? And these guys are going, yes, we do. We have to customize it for your firm, but we can have you up and running in like 3 to 5 months. Before a year ago, these guys were talking about setting you up in 18 to 24 months. Now it's 5 months or less. It's going mega fast. Now, how can you make money on this stock? You're afraid to buy it. You're not sure what to do. You want to get in on it, but do I really risk a lot of dough? It's a $36.83 price right here as of Friday night. This is Sunday, June 11th. So this is Friday, June the 9th is where this stock closed at. What do you do? The folks on CNBC and all the other networks out there are going to, every time they refer to the stock, they talk about, you better be careful as an investor to get into this because The stock has already gone up 200%. What they fail to mention is that their pals, the Wall Street investment bankers, they took this company public a couple of years ago. That stock ran up to almost 160 bucks a share, and they were CNBC and others were all over this stock as the future of computing and the future of back office and all this stuff. And then it went all the way down to 10 bucks. Now you hear all the time about SPACs being really crazy, scary investments where you could lose all your money. How about this one? There were people who paid 155 a share and were watching it trade at $10 3-4 months ago. And now the networks are saying, oh, it's gone up 200 something percent. You better be careful. They're not mentioning the fact that, yeah, it's 36 now, but it was 156 2 years ago. And you guys were promoting the hell out of that stock. They just conveniently don't tell you that. So welcome to the real world about what's really going on. Look, if you want to invest in this company, you've got several ways to do it. You can just buy the stock at 36.80 and gamble it and hope it'll all work out. It goes up to 50, 60, 70 bucks, sell it. Thank you, and go on. On the other hand, you could say, well, I'm going to buy it today and hold it for 10 years. This could become a $300 company, a $500 company. NVIDIA is $380. It went all the way up. Apple went way up. It did stock splits and everything else. It's at thousands of dollars a share compared to where Apple came out at. So this stock could do that too. There's only 100 million out. So if they did a 3-to-1 split, there'd only be 300 million out. Sure, this goes to 150 a share. They do a 3-for-1 split. It's 50 a share. And then it goes to another 150 a share. It's $450 a share. It's 36 now. Yes, you could just buy the stock. But there are a number of you out there who are going, Bruce, I know you like talking about options all the time. You talk about covered calls and cash secured puts. Is there a way I can play this with a lot less money or a lot less risk? Is there a way I can play this with a bit of insurance? And I say, yes, there is. A number of my viewers on my channel have figured out that they are writing cash secured puts on this stock. Now, what does that mean? What they're doing is they're saying, okay, I will offer to buy these shares at a set price for a certain amount of time if the gambler on the other side of my trade gives me money up front. It's an insurance premium that helps take away some of this risk. I'm prepared to, depending on how much you want to give me, I'll make a deal. So here's an idea for you, okay? This is a put contract that exists right now. It just closed Friday night. What you're looking at here is right over here, a $35 cash secured put. The stock closed on Friday night at $36.99, that blue box right there. The last trade on the contract was 11.10. It was down 21 cents on the day. The bid was 10.80. The ask was 11.50 at the final buzzer. 182 traded and 5,099 contracts exist at the moment. Now, if you have $3,500 US dollars, you can write one of these puts. You can create one, make it the 5,100th put out there. Or if you have $7,000, you can write two. If you have $35,000, you can write five. It's up to you how much money you want to put into this trade. But for $35 a share or $3,500, you can write one contract. And if you sell it at this last trade price here, 11.10, let's round it to $11. That $11 price for that contract means you have to multiply the 11 by 100 shares. So $35 a share is a $3,500 commitment. $1,100 coming in is $11 coming in is $1,100 coming in. So you put $3,500 up and you get $1,100 in cash back right away, right now. So in effect, you're saying to the option buyer, and the option buyer is saying to you, put up $3,500. Be prepared to buy this stock for $35 a share until the third Friday of January in 2024, just 6 months from now plus a week. I'll give you $1,100 right now, or $11 a share. In other words, you as the option writer are prepared to pay $24 a share for this stock using this one contract. So you've put up $3,500 in liquidity. You got $1,100 in cash back. You're into this trade for $2,400 or $24 a share. And if the shares trade on the open market at $35 or higher between now and January of 24, 6 months from now, these contracts will be worth zero. You will keep all 1,100 and your $3,500 because you don't have to buy any stock. Obviously, if the shares drop in value, then this put contract could make the owner of the put money, or it could be that you, through your broker, will be notified you just bought 100 shares of AI at $35 a share, this contract price, less, of course, the 1,100 you already got. You just bought the stock for 24 bucks a share. Now, if you get notified that you just bought 100 shares of AI and they're trading at $30 a share and you just bought them at 35 less 11, you don't mind. Do you mind paying $30, $24 a share for a stock that's trading at 30? No. What would you do if that happened? What's your next move? You have two choices. You can just sell the stock for 30 bucks, add it to the cash you have on hand, which is $1,100, and you've got $4,100 left over. You started with 3,500 plus 1,100. You had 46. You still have 4,100. You're up $600. What are you going to do now? You're going to write another put contract. The stock's trading at 30. You're going to write at 32.50. Good for 6 months. Bring in $1,100 and say, let's do it all again. The other choice you have is you just bought 100 shares at net cost you $2,400. They're trading at $30 on the open market. You might decide to write a call option against those shares you now own. And you might write a $32.50 out of the money call option for 6 months out. You'll get about $10 for that, $1,000. And in effect, you're saying to the market, buy the shares off of me at $32.50 for the next 6 months. Just give me $1,000 up front and I'm happy to take a walk. For you, what does that mean? $32.50 would be the exercise price plus $1,000 cash that you just got paid on top of that. You just sold out for $42.50 on a stock that cost you $24. Not a bad trade. This is a way to gamble on AI without gambling on AI. You're saying to the market, I'm prepared to buy the shares if you compensate me upfront right now. I'll give you 6 months to sell me this stock if you want to sell it to me for 35 a share. I'll commit to buying it up to that long. Of course, having just said all of that, I also can say to you, you can end this deal anytime you want. If you get $1,100 for writing this contract, or 11,000 for writing 10 of them, whatever number you want to do, and 3 weeks from now, the stock is trading right where it is here. It hasn't gone up, hasn't gone down. It's around 36 something, $37 a share. This put contract will lose money because it is losing time. It expires the third Friday of January, 2024. That is 6 months and 1 week from now. If 5 weeks go by, there's only 5 months left. This contract will lose $1, $1.50 by that point in time value. It'll be trading around $9.50. You got 1,100, it's worth $950. You can buy it back anytime you want. Just buy a contract back for this exact expiry date. There's 5,100 of them out there. You buy one back and keep the change. Well, if you got 1,100 in and spent $950 to get it back, you keep $150. That's your money. You're off the hook. You don't have to buy any stock from anybody, and you have your $3,500 back. You've pledged it. You've unpledged it. You're good to go. If, of course, the shares drop in value to, or sorry, if they rise in value, for example, they go from 36 to say $40, which we've already seen, but they go to 40 again. This put contract is now out of the money by $5, and it's losing time. It may be down into the $7 neighborhood very quickly. That puts you ahead $4 a share, or $400 a contract, or $4,000 on 10 contracts. Again, just depending how many you want to write. You want to write 1, 5, 10, 20, 50, 500 contracts. How much cash have you got? Every contract you want to write, you need $3,500. You've never owned the stock. You don't own the stock. You're only pledging to own the stock if the stock comes down under $35 a share. Remember, for you to lose money on this transaction, for you to be a loser, I mean a loser, the stock's going to have to go under $24 a share. If the shares go to $20, you can do that, but let's say they did. They go to $20 3 months from now. And you get notified by your broker, you just bought 100 shares at $3,500 or 1,000 of them, or however many calls you've written, 5, 10, whatever. You got the stock for $35 a share. It's trading at $20 a share. Your net cost was $24 a share. No matter how you cut it, you paid 24 bucks and it's trading at 20. That's the bad news. You've lost $400 on a wager where you put up $3,500 as a commitment. You've lost 400. You have in effect 3,100 bucks left. You own the stock. You own these shares. What can you do? You can just sell them at 20 and take your licks. Or you can say, well, you know what? I own the stock at 20. The shares are still pretty volatile. I mean, obviously, they've gone from 36, 37 down to 20. Here we are. I'm going to write a $22 contract against this stock. But for 6 months, I bet you can haul in $800 to $1,000 in premium upfront cash, which is more than the 400 you're down, putting you $400 ahead in a cash basis. And you can now play the other side of the market. Totally up to you. Otherwise, you sell the stock off, get rid of it for $2,000. Leftover money that you have left over, $1,100. You have $3,100 now, and you're going to write a cash secured put that might be a $22 or a $25 cash secured put for 6 months for like $1,000, $1,100 in cash, and you're going to wager it again. Dare them to sell you the stock. You might write a 20, you might write a 17, an 18. You'll decide at that point. Right now, I'm saying viewers are writing $35 put contracts with the stock near 37. So the stock's $2 higher on the open market than the put strike price. In other words, it's $2 out of the money. The shares go down to 20, you might write an $18 put, $2 out of the money. Be prepared to pay 18 for the stock plus the less that money you're going to get, that insurance money you're going to get. If that's $1,000, $10 a share, you're offering to pay $8 a share for the stock. Are you willing to play that game? There you go. Put contracts fluctuate just like call contracts, just like stocks. Up and down they go. This has phenomenal premiums, this particular trade. And why? It's because there's only 90 million free trading. There's 32 million shares shorted. And there's all kinds of investors and shorters yelling out there saying, I'm right. No, I'm right. No, I'm right. And the company's going, we have an investor day coming up on the 22nd of June. We're going to show you how we feel about our future. And every 3 months, of course, the company comes up with their financials to back up their claim that, hey, we're on the right track. We're getting clients coming to us who want to buy our stuff, and we're signing them up like crazy right now. That's the gamble. Artificial intelligence is the new #1 story in the market. It is dominating all the chats. It's dominating all the Discord channels, all of the Wall Street Bets talk, CNBC, Fox Business, Wall Street Journal, all the business sections of all the papers and all the periodicals, and all kinds of analysts are all over AI, artificial intelligence, stocks, chip makers, software producers, internet. And companies like Microsoft, Google, Facebook, which is Meta, they're all running up. Same with Meta, and so same with Nvidia. And here is this one, AI. It is a darling of the Wall Street crowd. They are buying and selling this stock like crazy. Tons of speculation going on. For you, this might be something that might appeal to you if you want to quit your day job and bring in income and not work for a living anymore. You got 70 grand lying around inside your 401k or what have you, or you can get your hands on 70,000 of liquidity through a home equity loan. You could theoretically write 20 of these put contracts that I was just telling you about, and you would bring in $22,000 in premiums against your $70,000 commitment. And if you buy those puts back for 10 grand in the next 2 months, you clear $12,000 in cash, which is $6,000 a month in net money to you. You still got your 70 grand. You can write new contracts all over again anytime you want. Recalibrate them, readjust them anytime you wish. If these puts drop in value because the shares are holding or going higher, you are going to make a ton of money, as much as $22,000 if you wait until the end of the year in theory. But if you can pull out 10, 12 grand in 2 months, 5 to 6 grand per 30 days. Does that replace your paycheck? For some people, it's unthinkable. 70,000 and I don't have to work. I thought I had to have a million to be able to not work. For those of you with $350,000 and you're 55 years of age and you're sitting there listening to me, you're going, I could do 50 of these. Or no, I could do 100 of these. 350,000, I could write 100 of these contracts. 10 will bring me $11,000. 100 will bring me $110,000. And at the end of the year, January, third Friday of January, these expire theoretically worthless. I could keep all 110,000 for the next 6 months and a week. What am I working for? I'm not going to make $110,000 in the next 6 months working for my boss. It's not there. Even if I make half this amount of money in the next 3 or 4 months on depreciation, this is serious dough. This can add to your existing 401k and grow it dramatically. And yet you're not a shareholder of the company. You don't have to worry about the fluctuating of the stock up and down minute to minute on as a shareholder. You're just watching it on a contract basis, knowing that your contracts have 6 months and 1 week to live the minute you write them. 3 months from now, they're down to 3 months and one week to live. They could be trading at $6 each just on time shrinkage, assuming the stock's in this neighborhood. Something to think about. Join me Monday to Friday live right here, Stock Markets with Bruce. We talk about the markets every day, Monday to Friday, from 8:30 in the morning until 10:30 in the morning, 1 hour before the opening, the first hour after opening. And I talk to my viewers about writing option contracts. We talk about this every day, all the time. If you want to learn how to write options, you want to get a little handle on it, go over here, go to my website, stockmarketswithbruce.ca. There it is right there. I'm out of Canada. That's why it's .ca. Head over there. You'll find my homepage. You'll find my picture. You'll find the link that says classes. There's 15 classes all about the stock option market, how to buy and sell call contracts, put contracts, how to write call and put contracts, how to write poor man covered calls, all the strategies that are in there. We talk about this all the time. You can become part of the channel and head on over there and listen to this old man speaking plain English. I hope you get it. Hope it makes sense to you. Thank you for joining me today. Sorry for the length of this contract, this video. These videos are not easy to produce in 30 seconds. There's a lot to it. But then again, if you want to change your life, and I mean, you really want to change your life and get away from a day job and become retired in a higher democratic lifestyle, you have to invest some time and money into doing it. And here is how you can invest some of your time to learn how options work. You can take the classes, buy 1, buy 3, buy 1 a week, 1 a month, whenever you want. Watch for nothing during the day. Take the classes on the side and become educated on how options work. You're welcome to join us. There's a pretty good group of followers that hang out with me every day. Thank you for hanging out with me today. Hope you found this enlightening, interesting, entertaining. I don't know. Hopefully we'll see you tomorrow. Tomorrow's Monday, June the 12th. We're back at it first thing in the morning, 8:30 Eastern time. Look forward to seeing you then. Take care, everybody. Bye for now.